What is going on, guys? Welcome back to the channel. I wanted to talk a little bit about real estate, some of the problems that are facing the real estate industry, along with buyers and sellers, what everybody is looking at, some of the issues that are going on along with these interest rates, what kind of changes and impact it's actually having on the real estate market, and I guess your everyday individual who's either looking to buy or sell real estate. Just wanted to look in at some of the statistics that are coming in here in October. Says the average home price is down 2% from its June peak nationally. So it makes sense that those home prices are coming down, but is 2% enough to really make a difference right now? That's what we want to talk about. It says that the median home price in August fell about 0.98%, which was just slightly better than July's that came in at 1.05. So the average home price, as the title mentioned, is down about 2% so far. And we're going into the slow winter months where, people that really either have to move or they need to move, those are the ones that go out there in the cold and the snow and they tromp through and find the house that they want. So it really does slow down seasonally, I guess, depending on where you live. But if you have winter, people don't go out in the winter unless they have to. So we're going to see just how much of this slowdown that we're already seeing kind of impacts or how it multiplies as we go into those winter months. We haven't seen this kind of slowdown for quite a while. It says shortly after the collapse of Lehman Brothers in the winter of '08. That's not good. We don't want to totally see or hear that by any means. It's all coming down to the impact that the rising interest rates, the mortgage rates are having, and the home prices that are elevated right now. It's at a very rough spot. So we're going to see how all of this unfolds. We're at a point where we have limited inventory on the market. It was a tough time for people who wanted to sell their house to be able to find something that they wanted to move into. They knew that they were going to be overpaying for a home if they did move at that time. Ultimately, they would have got a surplus from the sale of their house, so it kind of would have been a wash if you were coming from a house. But the first-time home buyers, they were paying a premium, and the sellers, I think they either just did not want to move and pay that premium. So it really tightened up our inventory. It was so tight. It's been too tight for too long, and that's been driving those home prices higher and higher, having the supply and demand sufficient. Having the lack of, I guess, inventory is creating that supply and demand, which created the frenzy. So we're kind of seeing the repercussions of that right now and how this is all going to unfold for the housing market. We'll look briefly at kind of what the interest rates were and what you could afford, and now what they are and what's affordable. It's kind of crazy to see some of those numbers. It's saying that it takes about 38.2% of the median household income to make the monthly mortgage payment on a median priced home bought with a 30-year mortgage and 20% down. So we'll use the numbers, like 400,000, and then we can easily do math from there. But it was the historically low inventory with the low interest rates. It was just creating a frenzy, and right now we still have one of those problems. We have a lack of inventory on the market, and we have I want to say high interest rates. We've seen them much higher in the past. Do I think they're too high right now for a lot of buyers as far as what the housing prices are? Yes, I do. I would like to see a little bit of a correction there, but I could see a norm, going back to somewhere in that 5% range. I think ultimately that is something that could be sustainable for the buyers and for the American household to be able to withstand something around there, as long as we see a little bit of a correction in the housing prices. We're going to have to find some sort of happy medium between those two things. The home prices, they're beginning to fall from post-pandemic peaks. but they're still up. It says we're still up about 12% from August 2021. It was unsustainable, the growth, the supply and demand issues. It was just sending the housing market skyrocketing. So now we got to see how this is going to unwind. It says while 20% of the markets have only seen marginal declines, less than 1%, so far a third have experienced drops of 3% or more, including 9 where prices have fallen more than 5%. And the sharpest correction was in San Jose, about 13% down, or about $200,000. So followed by San Francisco down 10%, and Seattle was following right behind them. So some of the hotter markets, they're cooling off. We're seeing that come to light. We'll see how it all shakes out. Maybe you've been noticing, those mortgage brokers that are popping up on every street corner, the independent brokers. They always come in whenever there's a nice housing boom. They come in, they want to get their money, they want to write those loans, and, sooner or later you're going to start seeing those little shops closed up. They come in, they get it while it's hot, and then whenever there's not enough mortgages to go around, somebody has to go out of business, and it's usually the smaller companies that just popped up here and there. So looking at the cost of purchasing a $400,000 home, if you were buying whenever the interest rates were 2.5–3%, we'll just call it 3% because I don't think a lot of people caught the 2.5, but 3 was very easy to catch for quite a while. If you did a 30-year rate, 20% down, that's $80,000. Interest rate at 3%. Your monthly payment was very affordable, $1,349 plus your property tax and insurance. So depending on what your property taxes are, the insurance not so much of a big deal, but property taxes can be a killer. But that is super affordable for a lot of families, especially if you have 2 incomes in the household. A $400,000 house was not out of the reach for many families. Now looking at it in today's standards, doing the same thing, $400,000 house with the 20% down is still the same $80,000 that you're coming out of your pocket with. You got a 30-year mortgage on it. Your interest rate's in the 7.2 is what I just saw pop up here. I've seen prequals come through with 7.5 or even higher right now. So depending on your work history, your credit, and all of that fun stuff, what you want to put down is going to impact your interest rate. You might be able to find a little bit better than this. I would hope that you can, but this is kind of coming in somewhere around the average. So the monthly payment on that same $400,000 house is $2,172 now, which is crazy. That's about 40% increase for the same house, and the same house has technically came down, had a decline of about 2%. So is there a deficiency here? Are we seeing some sort of error in the equation of as far as where the home prices are currently sitting at and the interest rate? Yeah, we're seeing a major gap. This is something that's going to be painful and also out of the reach for a lot of people, which is bringing their buying power down. So you're eliminating a lot of home buyers for, say, these homes in the 400,000 where they could essentially reach that pretty easy. If you were looking at a $200,000 home back here, you're in it for $800. That's cheaper than rent. So it was only made sense that we were having such a housing crisis whenever people could buy this type of house for that affordable amount of a monthly payment. So do I think we're going to see as many foreclosures as we saw in, say, the 2008 era? I don't necessarily think so, because I think they are very affordable for anybody who got in with a nice interest rate. I think that's something that's sustainable for most families. It might get a little tight as inflation gets higher and higher, but at the same time, that's not unreasonable. A lot of areas have this as rent or higher, and families figure out how to pay that. So I think they'll be able to manage to pay their mortgage. Do I think they'll be in their home for a little bit longer than maybe life expected? Sometimes we move every 5 to 7 years. I don't know if that will be the case or not, and they might be in the home for just a little bit while longer. But getting in here, this would be a little bit of a struggle, I think, on a lot of families to be able to continue to pay that if things really tighten up in the overall economy, if things start to go really south, then I could see this being hard for a lot of families, which is going to make the housing market interesting. How many buyers are we still going to have out there? How many buyers are going to be willing to take on this interest rate? Now, they can always refinance, right? If they say, hey, I got it in the budget that I can do this for a year, 2 years, whatever, however long it takes, I can always refinance whenever the interest rates come back down, or maybe they never come back down, and that is a great interest rate. That's the problem, is we don't really know, but all we can do is see how this progresses. So it's one of those things that are going to be very interesting as we get in deeper into all of this, to see how the housing prices either they can't be sustained, or they can, and that's highly going to depend on if buyers, I think, are still willing to or able to pay out on these kind of monthly payments. But time will tell as far as that goes. It's just one of those things that are going to make it extremely difficult. And the housing bubble this time around wasn't created by anything nefarious, as far as what I could tell. We had a lot of just no doc loans that were going out back in 06, 07, whatever, 08 even, that were putting people into houses that they could not afford. This time around, people could actually afford those houses when they were getting put in there. So as long as they can continue to sustain that, I'm not expecting to see the foreclosure industry actually, just flood the markets with foreclosed homes. I guess that could be something that does happen to a degree, but we were kind of expecting that after the COVID era too, with a lot of the landlords that might have gotten stiffed by their tenants for an extended period of time. We were thinking that there might be a flood of foreclosed homes that would be coming back on the market there, and we didn't really see that either. They were able to weather the storm, or they were able to sell those homes off at a premium. So I didn't see that quite impact our markets either, which, that would have helped with the supply issue, in all honesty, that we were having, but we didn't get that. So it continued to affect the supply industry even to this day. So from here, we just kind of have to see which is going to give. Are we going to see a little bit of a relief on the interest rates and the homes? That would be ideal, if we could see a little bit of a pullback on home prices and interest rates, just to make this a little bit more affordable. 2% drop in homes, and going up substantially, 2 to 3 times on the interest rates, just make it hard. So we're going to keep a close eye on the housing market, what it's doing. As of right now, you see that there's still time to kind of sell your home for a premium, as long as you can find a buyer that's willing to take on these kind of interest rates. So it has not collapsed yet. It's still, to a degree, a seller's market. They're not naming their price. Things aren't going crazy. We're seeing a little bit of a softening in those prices, but it's not too late if you were looking to sell your house. Yeah, you might not get as much as your neighbor just got, 2 months, 3 months ago, 6 months ago, but we can't all time the top. So if you're still looking to sell, there's still an opportunity to sell if you want to get out from under some properties, if you got some rental properties, or even your own home. If there's still time right now, but we're going to see just how much time there is. And nobody knows the top, nobody knows the bottom, nobody knows exactly how anything's going to restructure or come back together. All we can do is look at the statistics, the reports, kind of look at the numbers, see what makes sense. And if you're a buyer, it's like I said, it's a high interest rate right now, and the home prices are inflated. So you kind of need to know what you're getting into if you are going to buy a home right now. If you're taking out a mortgage, you may be in there just a little bit longer than you thought, or life planned for you to be there. It might take a little bit of time to get back out. You could sit on the fence and just wait for these prices to soften a little bit, or the interest rates, one or the other, or both. You're never going to time the top, you're never going to time the bottom, but you don't have to make a bad decision. If you're not in a situation where you have to make an immediate decision, then you can sit back and wait and kind of see how this all shakes out. So I just wanted to pop in with a real estate update. It's going to affect us all one way or another, whether you own a home, you want to own a home, or you want to sell a home. We're all impacted by the real estate market. So Have a good one, guys. Thanks for coming back and watching another one. I will catch you in the next one. As always, stay golden, people.